Hello everyone, welcome to EduTap and welcome to today's video. So today let's discuss a very important notification that has been released by the Reserve Bank of India. So the RBI has issued detailed norms for the outsourcing of IT services by the banks, NBFCs and the regulated entities. So the RBI has released a new master direction. A new master direction on the outsourcing of IT services has been released by the RBI, and it is a very big step of the RBI to release a new master direction, to release the new guidelines. So let's understand that what is this master direction all about and what it is trying to say. So before this, do subscribe to our YouTube channel and join our Telegram channel for the PDF of this session. Okay. So now starting with, the RBI has released the master direction on outsourcing of information technology services recently only, and the RBI has said that the regulated entities, have been extensively utilizing the information technology and information technology enabled services. Okay, so to support their business models, products and services that are offered to their customers. So you can understand that in this world, in this generation, the IT services, the information technology is very important. The computers that we are using, the hardware on it, the software that we are using on it, as well as the applications that has been developed, the applications, the mobile applications of the bank. This all involves the IT technology, and the banks and the NBFCs are trying to become the digital ecosystem. They are trying to develop the digital ecosystem. So they have been leveraging, utilizing the IT and IT enabled services. So in February 2022, the RBI, Reserve Bank of India, proposed that there should be issuance of the suitable regulatory guidelines on outsourcing of IT services. Now, all the IT activities cannot be done by the bank itself. So, the bank outsources the IT services. The bank asks the third party to build a mobile application for the bank, like the PNB One application of PNB, the iMobile application, mobile application of the ICICI Bank. So the banks are not developing it themselves, they are outsourcing the IT services with an aim to ensure. So there is the need, when the outsourcing of IT services is being done, there is a need for the regulatory guidelines, for the complete norms that has to be set up by the Reserve Bank of India, with the aim to ensure effective management of the attendant risk, that all the risks should be managed properly, because when you are outsourcing some activity, there are the risks that are attached with that activity, because the third party is getting involved here. So I hope you have understood that the IT services are very important in this digital world, we can say, for becoming the digital ecosystem, as well as the outsourcing of IT services is happening, for which the RBI said that the regulatory guidelines are needed, and this was said in the statement on developmental and regulatory policies document that was released on Feb 2022. Okay, so the document was released, and in this was said that there should be the issuance of suitable regulatory guidelines. Okay, so in June 2022, the draft guidelines regarding the outsourcing of IT services were released, and after that the Reserve Bank of India said that we will be taking the comments from the stakeholders regarding the draft guidelines. And now in April 2023, the final guidelines, the master direction on the outsourcing of IT services has been finally released. So I hope you have understood this complete, that on February 2022, in the statement on developmental and regulatory policies document, the RBI said that we will be releasing such kind of guidelines for the outsourcing of IT services. June 2022, the draft was released. April 2023, the final guidelines have been released. Now, outsourcing means what? So, the RBI in its guidelines has mentioned this definition, that outsourcing may be defined as a bank's use of third party. When the bank is using a third party to perform the activities on a continuing basis that would normally be undertaken by the bank itself now or in the future. Continuing basis means for a fixed period, for a limited period, 2 years, 3 years, 5 years and such. So this is what the outsourcing means. Outsourcing of IT services means that the bank is using the third party to perform activities regarding the information technology services. So this is the definition that has been given by RBI. Now, RBI came out with detailed norms for outsourcing of IT services by banks, NBFCs and regulated financial sector entities like the CICs as well as the IFIs, that is the All India Financial Institutions. Okay, so the underlying principle of these directions, of these master direction that has been released in April 2023 is to ensure that outsourcing arrangements do not diminish the regulated entities' ability to fulfill its obligations to customers. Now the banks have the obligation, or the NBFCs has the obligation to secure the information of the customer, to protect the data of the customer. So this kind of obligation that the regulated entity has. So the regulated entity cannot say that, okay, we have outsourced the IT activity, now we cannot protect the data of the customers. This should not happen. So the outsourcing arrangement do not diminish the responsibility of the regulated entity of the bank, NBFCs and such to their customers, nor impede effective supervision by the RBI. Reserve Bank of India can supervise as it already does. Okay, so the supervision do not stop if the outsourcing of the services is happening. So these directions shall be called the Reserve Bank of India Outsourcing of Information Technology Services Directions 2023. So you can see that it was released in 2023. These directions shall come into effect from October 1, 2023. So remember this date, month and such. Okay. So now coming to the applicability. Now these directions are applicable on which institutions? So all banking companies, okay, all banking companies means including the bank, the foreign banks, the local area banks, the small finance banks, the payment banks, the scheduled commercial banks, scheduled commercial banks, excluding the regional rural banks, because the regional rural banks have not been mentioned here. Okay. So the all banking companies, including the scheduled commercial banks, excluding regional rural banks, and small finance bank, local area banks, payment banks. Okay. Corresponding even the new banks and the State Bank of India. Tier 3 and Tier 4 urban cooperative banks will have to follow these master direction. The top layer, upper layer and middle layer of the non-banking financial companies will have to follow these master directions. Or the credit information companies, the all India financial institutions like Exim Bank, the NABARD, NHB, the SEBI, NABARD, they will have to follow these master directions. So I hope you have understood this very clearly, that all of these institutions will have to follow the master direction. Now you will say that what is this Tier 3 and Tier 4 of the urban cooperative banks? So we have discussed it again and again, that the Tier 3 urban cooperative banks are those which have deposits more than 1000 crore and up to 10,000 crore, and Tier 4 UCBs have deposits more than 10,000 crore. Now what is this top layer, upper layer and middle layer of NBFCs? So this we have discussed in the scale based regulatory framework. So this we have discussed in that. So the base layer is the, like there is the layers. So this is the base layer, then there is the middle layer, then there is the upper layer. So base layer, middle layer, upper layer and top layer. So the base layer is the small NBFCs, we can say, that do not have to follow many regulations by the RBI. So middle layer, they are a little big NBFCs that have to follow more guidelines of the RBI. The upper layer have to follow stringent regulations from the RBI. The top layer, so we will discuss it now. The base layer shall comprise of non-deposit taking NBFCs below the asset size of 1000 crore and the peer-to-peer NBFCs or the account aggregator NBFCs, that are the small NBFCs. The middle layer NBFC, all deposit taking NBFCs, because they are directly connected with the public, and that's why they are coming under the middle layer of the scale-based regulatory framework, irrespective of asset size, as well as non-deposit taking NBFCs that have the asset size of greater than of 1000 crore or above 1000 crore, that have the asset size of 1000 crore or above 1000 crore. Okay. So core investment companies, all of these come under the middle layer. Upper layer shall comprise of those NBFCs which are specifically identified by the Reserve Bank as warranting enhanced regulatory requirement based on set parameters. So upper layer have less NBFCs, have less number of NBFCs, those NBFCs on which the RBI needs to have stringent regulation. Top layer will be ideally remain empty if RBI thinks that a very bad thing is happening, okay, that there is substantial increase in the potential threat, systemic risk, then the upper layer NBFCs will be transferred to top layer NBFC. So I hope you have understood the scale-based regulatory framework. So what the applicability is saying, that the top layer, upper layer and middle layer NBFCs will have to follow the master direction, that is the base layer NBFC will not have to follow this master direction. Coming to these directions shall apply to material outsourcing of information technology services arrangement. What does material outsourcing of IT services means? That are substantial, that are very important IT services, if disrupted or compromised, shall have the potential to significantly impact the regulated entities' business operations. So those are the material outsourcing of IT services, the important IT services that are being outsourced. So this master direction is for those kind of IT services may have material impact, important, significant impact on the regulated entities customers in the event of any unauthorized access, loss or theft of the customer information. So those kind of IT services are the material IT services, material outsourcing of IT services. So remember this, that they are very important IT services that are being outsourced. So for these kind of IT services, the directions will apply. So outsourcing of IT services. Now, what are those material outsourcing of IT services? So IT infrastructure management, maintenance and support. So outsourcing of the following activities, that is outsourcing of IT services, these are under that category. Okay. So there are the 7 categories. So there are the 7 outsourcing of IT services that can happen. This is the master direction for these 7 IT services. IT infrastructure management, maintenance, support, that is the maintenance of the hardware, the maintenance support of the hardware, software, firmware, as well as network and security solutions that is being provided by the third party, the maintenance that is provided by the third party of the main network, as well as the security. Okay, so here the IT infrastructure is being talked about, here the network and security is being talked about, the application development like the PNB1 application development that is happening, or the mobile application development that is happening, that can be outsourced. That is the outsourcing of IT service that can happen. Maintenance and testing of the mobile applications, application service providers including the ATM switch application service providers. Okay, services and operations that is related to data centers where the data is being accumulated, is being collected, is being stored. Cloud computing services, so the services that is related to the handling of the cloud, okay, in which the data will go. Managed security services as well as management of IT infrastructure technology services associated with payment system ecosystem. So all of these are the material outsourcing of IT services, and these are the 7 categories that you need to understand. Okay. So service provider means service providers are the third parties that are providing this outsourcing of IT services, means the provider of the IT or IT enabled services including the entities that is related to regulated entity. So the service provider, the third party, can be any entity that is related to regulated entity or those which belong to the same group or conglomerate to which the regulated entity belong. Okay. So the service provider can even be a company that is in the same group that is being handled by the bank. Okay, so a group, let's say there is a big group in which the bank is there, in which the NBFC is there, in which the payment system operator is also there, in which some service provider is all there. So they all are a part of a big group, of a big company. Okay. So now coming to services not considered under the outsourcing of IT services under this master direction, for the purpose of this master direction. So this master direction is only talking about the important material outsourcing of IT services that can directly disrupt the activities of the banks, of the regulated entities, and can have a big impact on the data. So this master direction is not talking about the other small kind of IT services, is not talking about the small outsourcing of IT services. So the services activities that are not considered under the outsourcing of IT services for the purpose of this master direction. So the procurement of IT hardware or appliances. So here in this outsourcing of IT services, we are talking about the management, maintenance and support. The procurement has to be done by the bank itself, or this is not coming under the material outsourcing of IT services. Acquisition of the IT software, product, application, this is again has to be done by the bank itself. Okay, this will not come under the outsourcing of IT services for which the master direction has been made. So all of these are not very important. Okay, they are not important, just you have to understand that these are the 7 services for which the outsourcing can happen, and these are not considered, or more of these are not considered under the master direction. Like if we are talking about the applications that is being provided by the financial sector regulator, so this is not directly the work of the bank. Okay, the direct working of the bank. So platforms that is provided by entities, so this will not come under the outsourcing of IT service for the bank, because this is not the directly work of the bank. Outsourcing means that the work of the bank is being done by some third party. So this is the work of the different platforms, and this is not the work of the bank that is done by some third party. Okay, so all of this you can read Next, coming to the vendors or entities who are not considered as third party. So the business correspondent is the extended arm of the bank branch who is providing the financial and banking services to the customers in the far off areas, in the unbanked or underbanked areas. Okay, so the business correspondents are not third parties, they are the extended branch of the banks only. Payment system operators authorized by the Reserve Bank of India, they are not third parties. Okay, the Paytm, Google Pay, Phone Pay, they are not the third party service providers. Partnership based fintech firms, here the partnership is being talked about, so this is not the third party. Services of fintech firms for data retrieval, data validation, verification services such as these. So for these also, the third party like fintech firms will not be called the third party if they are doing these kind of activities. Telecom service providers will not be coming under the third party service provider, as they are directly linked to the banks. Security audit consultants, here we are talking about the auditing, so they will also not come under the third party. Okay, so now coming to the role of the regulated entity, we have understood about the applicability and everything. Now we can come to the directions, that what directions the banks, NBFCs, CICs will have to follow. So regulatory and supervisory requirements, if the outsourcing of any activity is happening, this should not diminish the regulated entity's obligation, as also of its board and senior management obligations to the customer. So the obligation will be of the regulated entity only, even if the service provider is some third party. If anything wrong is happening, if the data breach is happening, the blame will go on the bank or the NBFC, that is the main entity. Okay, the regulated entities shall not engage an IT service provider that would result in reputation loss. So if a IT service provider is known for the data breach, is known for the data theft or something, now you are connecting with such IT service provider, so it will harm the reputation of that bank, that why that bank is connecting with such poor kind of IT service provider. Notwithstanding whether the service provider is located in India or abroad, the service provider can be some Indian companies and can be some foreign company also. The regulated entity shall ensure that the outsourcing should neither impede nor interfere with the ability of the regulated entity to effectively oversee and manage its activity. Now, the application is being provided by a third party, the mobile application, but the mobile application is actually of the bank only. So, the bank has to see that the banking activity is not being harmed. Okay. Further, the regulated entity shall ensure that the outsourcing does not impede the RBI in carrying out its supervisory functions and objectives. So the regulated entity's work should not be harmed, as well as the supervision done by the RBI should not be interfered with. REs shall ensure that the service provider, if not a group company, that is, if it is not in the same group as the regulated entity, shall not be owned or controlled by any director or key managerial person or approver of the outsourcing arrangement of the regulated entity. So the service provider should not be owned, controlled by the makers of the framework for the outsourcing arrangement. Okay, because the board is going to be the one that is going to make the framework for the outsourcing of the services. Okay, so here you can see the additional requirements for the cross-border outsourcing. So if some company that is from abroad is providing the third-party services, providing the information technology services, so there are some additional guidelines that the bank has to follow. The engagement of a service provider based on a different jurisdiction, based on a different country, exposes the RE to the country risk, because in the other country there are different rules and regulations. So the RE regulated entity has to focus that there is no kind of data breach or there is no kind of harm that is happening. Okay, establish sound procedures for mitigating the country risk that is involved with different rules and regulations in the other country. So they should have the appropriate contingency and exit strategies. When they feel that okay, some kind of problem is coming with this particular company, they should exit that service provider. Okay, so the RE and the RBI to direct and conduct audit or inspection. So the RBI and the regulated entity can do the audit and the inspection of the service provider. So this should be also possible. Then only the service provider from the cross border from the other country can be utilized for providing the services. Now coming to comprehensive assessment of the need for outsourcing and attendant risks. So there are different risks that are involved. Okay, so need for the outsourcing of IT services based on comprehensive assessment. So the comprehensive assessment should happen that what are the kind of risks, what are the kind of benefits that you are getting from outsourcing of the IT services. So attendant benefits, risks that are involved, availability of the processes to manage those risks. So all of these should be present when you are outsourcing the IT services. Okay, so the need for the outsourcing should be there based on the criticality of the activity, based on the huge activity that it is, based on the troublesome or the complicated IT service that is there. Then only there should be the need for the outsourcing. Determining expectations and outcome from the outsourcing, that this is the expectation that we want a new application and this should be the outcome that we should get from this engagement with the third party. Determining success factors and cost benefit analysis, as well as deciding the model for outsourcing. So there are different models for outsourcing. Compliance with all applicable statutory regulatory requirements, this should happen that the guidelines should be followed. Okay, grievance redressal mechanism, a robust grievance redressal mechanism should be present, and it is the duty, it is the work of the regulated entity only to resolve the problems of the customers. Okay, so the grievances related to outsourced services shall rest with the regulated entity that has to handle the grievance of the customers. Outsourcing arrangements shall not affect the rights of a customer against the regulated entity. So the regulated entity has to resolve the grievances if any, uh, even if the outsourced service is related with, or even if there is a third service provider, it is the duty of the regulated entity only to resolve the grievances. Okay, now coming to the role of board. So the board, I have told you, the board has to present the framework for the approval of IT sourcing, the approving policies to evaluate the risk and the materiality of the all existing prospective IT outsourcing. So simply the board has the work to make the framework, to build the framework, as well as administrative framework has to be built for the senior management, that how the senior management will be working for the outsourcing of the IT. While the senior management has the work of formulating the IT outsourcing policies and procedures. So the senior management has to look after the procedure. Okay, evaluating the risk and the materiality of all existing prospective IT. So the broad work is being done by the board. The board has to form the broad framework, but when looking at each and every outsourcing of IT services, that has to be done by the senior management. There the board will not be looking at each and every outsourcing of IT services. The board will only provide a broad kind of framework. So the prior evaluation of the prospective IT outsourcing arrangement has to be done by the senior management. The identifying of IT outsourcing risk, ensuring that suitable business continuity plans are there, that the business should run even if the service provider is going down, even if the service provider is not able to do some work. Ensuring effective oversight over the third party. So all of these tasks has to be done by the senior management. Simply you have to remember that the board is going to do the broader work, while the procedure, overlooking the procedures and overlooking each and every step, is the work of the senior management. Okay, now coming to risk management. So the financial institutions should also put in place a risk management framework for outsourcing that should comprehensively deal with the process, responsibilities for identification, measurement. So you have to identify that these are the risks that can come, how big these risks can be, as well as how we can mitigate, reduce this risk, how we can manage these kind of risks, and how to report these kind of risks. So this all should come under the risk management. RE should ask their service providers to develop and establish a robust framework for documenting, maintaining and testing the business continuity plan, that even if the service provider system is going haywire, or the service provider third party is not doing its work properly, so in that contingency kind of situation, what is going to happen? So there should be a substitute plan, there should be the business continuity plan, disaster recovery plan, that should be there. RE can also outsource any IT activity, IT enables service within its business group, conglomerate, subject to conditions specified. Okay, so as I have told you that the bank can be a part of the same group as the service provider, but the service provider still has to follow all the rules as the other service provider will follow. Even if the service provider is in the same group as the bank, this service provider will have to do all kind of has to follow all kind of regulations as the other service providers would have followed. So concentration risk. Now concentration risk is an important definition that you must know. The regulated entity shall effectively assess the impact of concentration risk that is posed by. So concentration risk refers to when the multiple outsourcing of the IT services is done by the same service provider, and or the concentration risk posed by outsourcing critical or material functions to a limited number of service providers. So there is the concentration risk that many of the activities is done by the single service provider. If that service provider goes down, 5 of the IT services will go down. So such kind is the concentration risk. So now legally the outsourcing agreement. So there should be a legally binding agreement that the REs shall ensure that their rights and obligations and those of each of their service providers are clearly defined and set out in legally binding written agreement. That the details of the activity that is being done by the third party, that should be done by the third party, appropriate service and performance standards that the third party has to follow, the effective access to the RE by the RE of all data. So the regulatory entity should have the access to all the data that the service provider is collecting through the IT of the bank. Regular monitoring and assessment of the service provider by the regulated entity, even by the Reserve Bank of India. So there should be a legally binding agreement that should tell the obligation of the service provider, the obligation of the regulated entity, the rights of the service provider, the rights of the regulated entity. Okay. Outsourcing within a group or conglomerate. So RE may outsource any IT activity, IT enabled service within its business group or conglomerate, provided that such an arrangement is backed by the board approved policy. Like the broader framework has to be followed in this category, and appropriate service level arrangement agreement with its group entities are in place. Okay, so I hope you understand that even if the service provider is from the same group as the bank, but the service provider has to go through all the policies, all the framework, okay, should go through all the procedures, we can say. Monitoring and control of outsourced activities. So RE shall have in place a management structure to monitor and control its outsourced IT activities. That the management, the final control of the managed activities of the outsourced activities should be in the hands of the regulated entity only. This shall include, not limited to, monitoring the performance, uptime of the systems and resources. So not only the management, not only the monitoring and the control should be in the hands of the regulated entities, but there should be continuous upgrade that should happen of the IT services that is being outsourced. So there should be the uptime of the system, the resources should be utilized in a better way, service availability, adherence to the service level agreement, and incident response mechanism. So all of these should be enhanced, all of these should be provided, okay, and this should be monitored and controlled by the regulated entity. So I hope you have understood all of the criteria. You have understood the role of the governance framework that will be developed, the grievance redressal that will be done by the regulated entities only. That is the responsibility of the regulated entity only. So I hope you will be easily able to answer this question, as well as you will be easily able to answer this question. So read this question very clearly and you will be able to answer this. Okay. So this is a big announcement from EduTap that we have brought for you the comprehensive guide for RBI, NABARD and SEBI, so that through a single guidebook you can get all your common queries answered. If you want to know about the organization, if you want to know about the examination, that what is the pattern of the exam, what is the syllabus for the exam, what are the previous year cutoff for the exam, all these common queries can be answered through a single guidebook. You do not have to visit different links, you do not have to visit different websites. Even if you want to know about the preparation, the sources and the strategy for the preparation, this is the guidebook that will provide you with all the answers of your common queries, okay, and there are the definitive answers that are provided in this guidebook. And let me tell you that this is absolutely free of cost, to save your time, to save your effort, and you can easily download this guidebook. The link is provided in the description box below, so do download this guidebook. So thank you very much. If you have any query, you can mail us here or you can call us through this number. Thank you very much.